So, what was going on in your mind during that 2008 crash? What pulled you back that you bounced back so high? Because its mindset plays a big role in that. So let's start from there.
Yeah. It's funny because a lot of people join the Crypto Renegades mastermind and they just want to learn the technicals. They just want to learn what to do, what's the formula. And I always make people watch a mindset video first. It's the mindset of a trader. And a lot of people are like, oh, I don't need mindset. I'm already motivated. I'm already inspired. I already have ambition. I'm already a go-getter. I don't need mindset stuff. Don't worry about that. I don't need that foo-foo stuff. And I'm like, no, you don't understand. I don't care who you are. The mindset is the most crucial thing because you got to have discipline. It's just like exercise, just like losing weight. You know how to do it. You know what you should eat. You know you should exercise. The discipline comes from doing it when you don't feel like doing it. Trading is similar. Like money is very emotional. And so the mindset when it comes to trading is not a matter of understanding when to go long or when to go short or how much to leverage, or those things are very easy to learn.
Welcome to the Wealth Vibe Show, where we explore not just how to create wealth, but how to protect it, retain, and expand it financially, spiritually, and energetically. Today's conversation is going to challenge the way you think about money, risk, and opportunity. We're talking about crypto, but not from a hype or speculation angle. This is a grounded, strategic conversation around contrarian thinking and market cycles. My guest today is Niko Mercuris. I hope I say his name right. He's the founder of Crypto Renegades, a high-level crypto trading mastermind with over 1,600 members and more than $200,000 in monthly revenue. Niko's story is powerful. After the 2008 financial crisis wiped out over $4 million of his net worth, he rebuilt his wealth through disciplined, strategic crypto trading. Today, he teaches entrepreneurs his crypto wormhole method. We wanted to learn about that for sure, helping them compress what usually takes decades into just a few years. So, Niko, I'm really excited to have you with us today. Welcome to the Wealth Vibe Show.
Thank you. And I'm excited to be here. Thanks for having me.
Of course. And today our topic is why most crypto traders fail and how the top 1% win. And Niko is the top cream, the top 1%. So this episode is not about getting rich quick narratives. It's about how the top 1% think differently. And obviously we have a perfect example here. So Niko, I would like to start with your story, but let's start, I think, from the 2008 crash. Take us back there. You were telling me you lost like $400 million. You lost your call center. You lost money in real estate. You lost like basically everything, but you got your employees. You had 150 employees at that time. So take us through that journey, and what did you learn from that?
Yeah, I mean, from 2008, from 1999 to about 2008, I ran a large call center, about 150 employees. We were doing about $12 million a year in gross revenue. I was, working 100-hour weeks, and basically, I thought I was doing quite well. I was netting about $500,000 or $600,000 a year after all expenses. Now, when you gross $12 million a year and you only take home 500,000 or 600,000, that's not really good. But, we had a high overhead. It was very cost intensive. But my problem is that I was spending a lot because I thought I was growing and it was just going to keep getting better and bigger. And so I was spending money just living life and enjoying my life, and, I had nice things. I had a horse, a ranch, and estate, and a private limo, and did whatever I wanted on a monthly basis. But then in 2008, we had the real estate market crash, but at the exact same time, I lost a multi-million-dollar contract with our call center. And it kind of like it was a double whammy. My income went from quite a lot down to almost zero overnight. And not only that, but I had invested in some properties at that time, and I had to go into what's called a offer and compromise on some of them. I had to short sell some of them. They were literally worth less than I just paid for them months ago. And so that was a big lesson in real estate. I thought I was doing the right thing, but my timing was off. So fast forward a little bit. I happened to write a couple books in my downtime when we were, thinking that I was just going to bounce right back very quickly because I just, I knew too much to, to stay down for long. But it took a few years to get back on top. But when I had the call center during the last, I would say 6 to 8 months of that, I was also learning to day trade the stock market. I was going to OTA, which was the Online Trading Academy. This is where hedge funds literally get their traders from. It's about a $30,000 education. This was back in, 18 years ago. Now I think it cost about $75,000 to go to OTA. And so I was trading the stock market, learning how to trade options and doing well. I did not want to work for a hedge fund. I wanted to trade my own money. And as I was doing that, crypto started to become a thing. In the mid 2012, 13, 14, Bitcoin was starting to become popular. I bought 50 Bitcoin. I think it was about $300 at the time in 2015, I think, and didn't really know anything about it. Just thought it was interesting. And Bitcoin jumped up to about $9,000, and I sold thinking I was a genius. And then the market crashed. Bitcoin went down to 3,500, and I was like, I got out just in time. Perfect. But then from there, it bounced very quickly and went right back up to 19,000, 25,000, 35,000, and so on. And that's when I really started paying attention. I'm like, what is this crypto thing? And I searched for decentralized trading platforms where I could trade crypto, and there weren't really any. And then I found one. It was in the DeFi space where I could trade Bitcoin futures contracts with leverage, very similar to options in the stock market, but we're trading futures and we're trading Bitcoin against the US dollar. And you could also trade on a Bitcoin margin, which means that if I make a trade and I win, I'm making Bitcoin, I'm not making US dollars. So I started doing that, and I never looked back really because it was easier than the stock market. I was trading Bitcoin, which was not really a company. It wasn't owned by somebody. There was no stocks. There was no owner. There was no CEO that could get in trouble or cheat on his wife or sell this, dump the shares. It was kind of its own independent anomaly at the time. And it had a lot of volatility, which is good for traders. It went up and down anywhere from 1% to 5% per day, still does. And that leaves a lot of opportunity to short the market and go long. And so when you understand price action and how to trade the charts like a hedge fund does, we don't care if Bitcoin just goes up. We want Bitcoin to go up in value, but we can make money in an up and down market. So I was shorting, I was going long pretty much daily, and I was doing what's called scalping. So I was scalping the markets, the ups and downs, and we were doing quite well with it. I never looked back. I didn't really go back to the stock market because Bitcoin just seemed easier. And I always ask people, people are like, why not just trade the stock market? I'm like, well, what is it you're trying to accomplish? And most people just want to make money. And I'm like, well, what does it matter whether you're trading Tesla stock, Apple stock, or Bitcoin? If you can make more money, not only that, but we're trading with up to 100x leverage. And the difference is that in the crypto markets, it's like the wild, wild west. There are no day trading rules. You don't need to have a certain amount of money in your account. You don't need to only trade 4 trades a week like the day trading rules in the stock market. You can trade 100 times a day with up to 100x leverage, and that means you could take $1,000 or $5,000 and trade as if you have $50,000 or $100,000 in your account. And the only thing that you're actually risking is your margin, which is the amount you're risking on that trade, the $1,000, for instance. So I would take $1,000 and trade with 20x leverage, and make and it would be a 1 or 5% move in the market, and I would make 50, 80, 100%. And that's when I coined the phrase the crypto wormhole, because what we were doing is collapsing time. We were able to make 100% gains on 1%, 2% moves in the market. And very difficult to do that in the stock market unless you already have hundreds of thousands or millions of dollars in your account. And so instead of risking $50,000 or $100,000 in the stock market to make 2%, we were doing the opposite. We were risking, $2,000 or $5,000 to make 100%. And so the risk to reward ratio was much greater. And I started posting, wins and on my Facebook page, and people just started reaching out. What is this? What are you doing? How are you doing that? And I was getting too bogged down with answering people's questions. So I created a Facebook group and invited people in, and about 200 people just joined over the weekend. just from my normal Facebook followers. And then that grew to now over 7,000 people. And we created the Crypto Renegades mastermind group from there. And that's where we just teach people how to day trade the crypto markets now.
Wow. Oh my God. That's a really good story. And then I would say the courage and the discipline that you created for yourself, that's pretty awesome. So I think there's a lot that you shared right now, but I'm going to go back and kind of simplify a little bit. I'm going to ask you a bunch of questions, whatever you shared, so that we can figure out how you created this strategy for yourself, that you basically, making so much money. And it's not just making money, you're building wealth, maybe generational wealth. And you're also teaching others, you're making a difference as well. So what was going on in your mind during that 2008 crash? What pulled you back that you bounced back so high? Because its mindset plays a big role in that. So let's start from there.
Yeah. It's funny because a lot of people join the Crypto Renegades Mastermind and they just want to learn the technicals. They just want to learn what to do. What's the formula? And I always make people watch a mindset video first. It's the mindset of a trader. And a lot of people are like, oh, I don't need mindset. I'm already motivated. I'm already inspired. I already have ambition. I'm already a go-getter. I don't need mindset stuff. Don't worry about that. I don't need that foo-foo stuff. And I'm like, no, you don't understand. I don't care who you are. The mindset is the most crucial thing because you got to have discipline. It's just like exercise, just like losing weight. You know how to do it. You know what you should eat. You should exercise. The discipline comes from doing it when you don't feel like doing it. Trading is similar. Like money is very emotional. And so the mindset when it comes to trading is not a matter of understanding when to go long or when to go short or how much to leverage, or those things are very easy to learn. And in fact, that's the easiest part of this is the technical analysis and understanding where to put your support and resistance levels and where the liquidity pools are. That's easy. The discipline comes from when you're in profit, taking the profit. It's amazing to me how many people won't take profit because they're greedy. There's two emotions. There's greed and fear that come into play when money's involved. And when you're in profit and it's going in the right direction, people's greed kick in and they're like, oh, well, I'm not going to close this trade now because I'm going to make more if I just stay in. And then what happens is as soon as they say that, it turns on them and goes the opposite direction. And then it goes all the way back down to break even when they could have taken a nice 80 or 100% profit on that trade and just sat on their hands and waited for the next signal. And so, we give signals in our group, and that's what people need the most work with is just being patient. It's like the tortoise and the hare story. It's like what's your goal? A lot of people are like, well, I want to make $10,000 a month, or I want to make $3,000 a month so I can at least retire my wife, or I just want to make enough to cover my car payment and my mortgage payment. But when they start trading, they realize they can make that every hour or in a day. And they're like, okay, you got to reset your goals here because just making $3,000 a month is easy to do when you understand this. But I think people get, they get bogged down with, oh, I want to make 50,000 now. I want to make 100,000 a month. How about let's just get you profitable first, and you become a consistently profitable trader, which means you take 10 trades in a row and 7, 8 of them are winners and maybe 1 or 2 are losers. And the losers, the loss is so small, but the winners, the gain is so big. So you're never going to win all the time. That's the one thing that people need to understand. You are going to have some losses. The goal is just that your losses are tiny compared to your winners. And that's like everything else in life, right? I mean, real estate investing or running a business. A lot of people, maybe your audience, are entrepreneurial minded. Most people that come into the trading world are entrepreneurs, or they are business owners mostly, and they already are risk takers to a degree. But it's like anything. If you wanted to open up a coffee shop or a hair salon or a jewelry store or something like that, you're going to have to lease a space. You're going to have to decorate. You're going to have to have all the inventory ready. You're going to have to hire employees. You're going to have to run marketing. You're going to spend tens of thousands of dollars before you get one customer in the door to sell your first cup of coffee or your first piece of jewelry. And so that's a big expense up front. And that's why they say that I think 70 or 80% of all businesses fail in the first year. And I think out of the ones that succeed, 70% of those fail in the second year. And it's very difficult, right? So in trading, it's you, and all you need is a device with an internet connection. You don't need a product. You don't need a service. You don't need to deliver anything to anybody. You don't need to talk to anybody. You don't need to sell anything to anybody. But you do need to understand market moves and support and resistance levels. And it's a different world. But the coolest thing about it is that this is one of the only things that I know of. And like, we had a conversation before this call, is that I'm also a real estate investor. I've also built multi-million-dollar companies with hundreds of employees. I've never seen anything that you can do concurrently with whatever else you're doing. You could have a job or a business now, and you can trade in your spare time, in your very spare time, and make full-time income without having all of the other things that you would normally need in a business. And it's basically just knowing when to enter and when to exit. And so, the mindset issue is big, because once you understand the technicals, you need to know when to get out and take that profit and sit there and wait for the next, entry.
Yeah, I know that's a good one. I really agree with you, because mindset, I think that's the number one. No matter what you do in your life, wherever you go and whatever field that you want it to work, mindset is the number one thing. No matter you say, I know everything, I think that's the wrong thing too, because nobody knows everything. So you got to learn. So what I'm hearing from your story is, you just need few things under your belt. Number one is you got to have the knowledge, and then you got to have the risk appetite, and you need to have a patience, whatever you're doing. And especially
Yes.
in trading, like you're saying, okay, or be happy whatever you got, take your wins and run. Like you said, out of 10 trades, 7 are the winners and you're losing on 3. But if you're disciplined and strategic. So I'm going to ask you this question right here. You were in real estate and you were like a big gig, you lost 4 million there. You had 150 employees. You were running the company in the parallel, you're doing a bunch of stuff, the call center, writing books. You were like, I will call it, you had a really success story right there. Right. So with the market crash, everything went downhill. Then you changed lanes. You went into Bitcoin. So what was that factor, that kind of gave you the courage or encouraged you to let me explore the digital currency? And then you got successful in that too, because it's not like that you created a new discipline or something, new mindset there. You already had those because that was a proven track record for you in some other field, maybe in real estate, maybe writing books or doing your call center. You brought your trace, those were the transferable skills, I would say. You brought it to the Bitcoin or the digital currency world. So if you can
Yeah.
shed some light on that, how the interest sparked and how did you transfer your
Yeah.
skills over and got successful again?
Well, to me, I think it was a process of elimination. It was reverse engineering. What is it that I truly wanted? And I think a lot of people, they see someone being successful at something. They're like, oh, I want to do that, because they see
Mhm.
what that person has or what that person's accomplished. But that doesn't mean you should do that, because that person has some sort of desire to do that, or some sort of attraction to that, or skill in that regard. I just wanted to make a lot of money because I wanted security. When my father died when I was 8 years old, my mother was left with nothing and had to start over again. And I saw her struggle, and I was kind of like riches to rags instead of rags to riches. A lot of people start out poor and then they build something. Not a lot of people, but the ones who do, right? They start out poor and then they build something. When I was a kid, we lived quite well. We had a beautiful house on the water in Terra Verde Island, Florida. My dad had a yacht in the backyard and a Rolls Royce in the garage. I didn't have anything to do with that. He was a successful restaurateur, but he died unexpectedly and young at 48 years old. And my mother was a stay-at-home mother who had no business experience whatsoever. So all she knew how to do was, her passion was furniture, antiques, because that's what she would do. She would go to garage sales and estate sales and buy antique furniture, and she beautifully decorated the house. So when my father died, he didn't plan for his death. He left her with pretty much nothing but bills. The IRS came, took everything, and they had to sell everything. So she had to start over from scratch, and all she had was her furniture. So she sold her furniture for a profit and realized that she could go and find furniture at estate sales and sell it for a profit. So she built an antique and jewelry store. I worked for her when I was in my teenage years, and I kind of learned that what I really wanted was security and not to ever worry about money again. So then I started thinking, what is it? Let's just boil it down. What are the things that people make the most money at? And real estate, I always had a passion for that. I always was drawn to real estate because I like the idea of building wealth through real estate. And I also like the idea of providing housing, and because you're helping people at the same time. I always liked things that were a win-win situation for everyone. I didn't want to be in a situation where I was making money at the expense of someone else. And so uh, stock market, real estate, things like that, I was drawn to. I was always drawn to the financial markets. Gold, I like collecting coins and gold, silver, and things like that. So everything financial related. And I just found that that was it. I'm a Taurus, as you can probably see. I got lots of bulls everywhere, and it's the sign of the stock market, right? The bull market. So for some
Right.
reason, I had that attraction. And then when crypto became a thing, I was like, well, this is a digital currency. It's supposed to be. Back then, no one knew what was going to happen with it. And I told friends you should buy Bitcoin, and I had one friend that bought 10 Bitcoin when it was about $1,000 per Bitcoin, and he still got them to this day. And I think at the peak at 126,000, it was like 1.26 million he had worth of Bitcoin. He still had his 10 Bitcoin, and I have never seen in my life anything increase in value like Bitcoin. I think it was 10 million% from 2009 to 2022 to 23, 10 million%. And we think 20% is good in real estate, make it a 20% annual return. We
Yeah.
grew up thinking the stock market or the S&P 500, 10, 15%. Oh, that's good. That's a good return. It's nothing compared to what some people are making trading. I mean, we have people in our group that do multiple, double, triple, quadruple digit gains, 2,000% gains, not per year, not per month, not per day, but per trade, sometimes multiple times per day. And so when you realize that, and that's why we coined the phrase crypto wormhole, because the idea is to get much further along in a much shorter period of time, because we don't live long enough to get rich slowly. And a lot of people say, oh, it's a get rich quick scheme. I'm like, no, the word scheme is short for schematic, which means to have a plan. And if you don't have a plan, you're not going to get rich quick or slow. And so when you have a good plan, and what I've also known by reading a lot of books from successful people is that they usually do tend to get quite rich or wealthy within a relatively short period of time, 5-10 years tops, and that's usually the time it takes for a business to become successful, around 5 years. And so I learned from all these different things, and I had the businesses. I dabbled in real estate, and I always liked trading, and the crypto was the new thing coming along. And once I realized that you can do it the same way as the stock market with leverage, I just kind of never looked back. Now I still have real estate. I have over 300 units, probably about $30 million worth of real estate right now in the multifamily space. But I do both. I do crypto to earn money. I teach and trade to earn money, to buy more real estate and to buy things that appreciate in value and at least hold their value and go up in value. And that we can also depreciate for tax purposes to save money on your business taxes. So if you're an entrepreneur or business person, real estate's a great tool to not only create wealth and increase your wealth over time, but also to depreciate and cost segregate to reduce or minimize your income taxes from your other business and your jobs. And so when you understand that, you learn all the principles behind all that, you can not only get much richer. And the old saying, the rich get richer and the poor get poor. It's because not only the strategies that they use, but the psychology and the mindset behind it. Because rich people tend to focus on what they want and not the lack of what they don't have, whereas poor people tend to focus on their lack or what they need, and so they
That's the big
attract more
one.
of that, unfortunately, to them. There's a the science of getting rich, and the secret of the law of attraction is all real, in my opinion.
That's so true.
And so once you kind of put it all together, pick something that, listen, we all got to make money. So focus on something. It doesn't have to be your total passion. You don't have to be in love with it. You could be in love with golfing, but you might realize you're not going to be a pro. But let's say you like real estate too. You can be a real estate investor or a broker, and your website could have a golf theme. You can always incorporate your passion into whatever it is you're doing for a living. So, but that's a long-winded answer, but really, I narrowed it down to the things that I think can make the most money in the shortest period of time so that I can then enjoy my passions. And so I
No,
think that,
I like that. I like that answer, even though it was long. Let me ask you a follow-up though. Crypto is good, stock market good. I think diversification is basically good. I'm in the real estate 100%. My husband is stock market, and I think we got the best of both worlds. That's the way I look at it. So have the understanding of both fields, but at the same time, I would say, real estate is not that volatile compared to stock market, and then crypto is even volatile than the stock market. So how do you deal with volatility? And then that creates a lot of fear and hesitation in people, and that people kind of shy away They feel like, oh, I do not know. And plus, this is the human psychology, right? If you do not know something, or if you do not have the knowledge, you don't even want to try even, because people
That's
wanting
right.
to walk the familiar trains. Not everybody's like you. Okay, I saw this, let me research it and find it. So give us some quick answer right there. What would you recommend, or, how do you deal with the volatility and then still make money? Like you were telling me earlier, you go both ways. You sell short and as well as
Yeah.
take the regular route as well.
Yeah. So, great question. And, a lot of people, when they come in, they're like, well, I'm a little nervous. This looks a little confusing. It's like a whole nother language. And I say, yeah, it is. It's like learning a new language
Mm-hmm.
sometimes,
Mm-hmm.
investing, but, uh, it's like people saying, oh, I'm computer illiterate. Well, then learn.
Mm-hmm.
How hard is it to learn something? I always use the analogy of driving a car. When you first learned how to drive a car, it was confusing. It was nerve wracking. I learned in a 1970 VW Bug with stick shift, and the instructor was telling me to put it in first gear and let the clutch out slow and put your blinker on, look both ways. And a car was honking at me. I stalled. I was blocking traffic. I was nervous. But 60 days later, I'm doing 60 miles an hour, steering with my knee, eating a cheeseburger in one hand and drinking a soda in the other. You get to the point where things just get easy,
You get comfortable.
right?
Yeah, second
That's right.
nature. Uh-huh.
So crypto, when people come into the space, they see the charts and they get a little bit like intimidated by it. But the reality is once you see me trade live and I show you how simple it is, you're like, oh, I didn't know. I didn't know it was that easy. Well, I don't know what go long means. I don't know what go short means.
Mm-hmm.
Long just means we're betting that the price is going to go up. Short just means we're betting that the price is going to go down. And if we bet when the price is going to go down and it goes down from our entry point, we make money on the way down. Whereas you can't do that if you just buy and hold the crypto. If you just buy Bitcoin at $100,000 and Bitcoin goes down to $80,000, you just lost $20,000 worth of value of your Bitcoin per Bitcoin. And I might have made a whole other Bitcoin on that down move. And so, yes, the value of it's less, but I have more of it now. So when it turns and goes back up to the original price, I have more of it at a higher price. So it all just, once it starts to make sense to you, it's like the light bulb goes on and you're like, oh, I see now. Because when we watch the news, CNBC or the business networks, and we see the stockbrokers and the hedge fund managers come on and they show the chart behind them and they're talking about all these, dividends and all this, people just, a fog goes in front of their eyes. They don't understand all the technical and the seriousness of it. And it's too confusing. But when someone just shows you how simple it is, then again, it's like learning a new language. But what if you didn't have to be fluent in the language? What if not only do you not have to be fluent, but you can do quite well without hardly even understanding the language? You just have to understand a few things of it. Like this iPhone, for instance, it probably does 1,000 things more than I use it for. I make calls on it, I text on it, I check some apps on it, but it probably does a lot more than that. But I don't need to know all that in order to use it as a tool. So when new people come into the space and I share my screen and I walk them through the steps of actually entering a position or taking one of my signals, they're like, "That's it." I'm like, "Yeah." You just entered the position. You put your take profit target where I told you. You put your stop loss where I told you. Now you can go take a nap. You can go to the beach. You can go do whatever you want because it's either going to hit your take profit target or it's going to come down and hit your stop loss. And if it turns on us and it hits our stop loss, the most you can lose is a small percentage of your margin. But if it hits your take profit target, you're making a 5-to-1 risk to reward ratio. And so if you're risking $1,000, for instance, that's the amount, that's your margin, 1,000. You could have $10,000 in your account. It doesn't matter. But if you're risking 1,000 of that, which is 10%, and then you put a 10% stop loss on that, which means now you're really only risking 10% of your $1,000, which is $100. So you're risking 1% of your entire account balance per trade. And if you do it that way, that's proper risk management. You can take 100 trades in a row and lose every single one of them before you go through your entire $10,000. But we have a 70% win ratio in our group. So, you're more likely to have 7 winners and 3 losses. But on your 7 winners, you might make $500 on each winner. And on your 3 losses, you might only lose $100 on each loss. So out of 10 trades, you make $3,500, you can lose $300. So no big deal. You live to trade another day. It's profitable, and you don't have any inventory, you don't have any employee, you don't have anybody to talk to. It's to me, it's peaceful, and it's just you and your screen. And I love it. But when I think when people are interested enough to learn about it, once they see that they can do it, that's when the light bulb goes on and they really get excited.
That's true. So when you trade, do you trade in US dollars or do you trade in Bitcoin? So basically, you're getting a Bitcoin. I mean, it's a digital currency, or tell us that too.
Yeah, so great question. So when you first open up a trading account, you have to deposit. You can either deposit crypto or you can deposit US dollars, but you do have to convert it. So inside the trading platform, you could trade USDT. USDT is a crypto that is pegged to the US dollar. So it's like the
Yeah,
equivalent version of the US dollar.
US dollar.
And
Yeah.
then, or Bitcoin or XRP or hundreds of other cryptos.
Uh-huh,
So
uh-huh.
you can trade using USDT against hundreds of cryptos. So if you make a profit, you're making USDT, which is as soon as you close that trade out, it goes right back into basically pegged to the US dollar. And then if you ever want to take your profits out, you just convert that to US dollar and send it back to your bank. Or you can trade on what's called a coin margin, which is a Bitcoin margin or an XRP margin, which basically just means I'm transferring my USDT into Bitcoin, and then I'm going to trade on a Bitcoin margin so that if I make a profit on this trade, I'm making Bitcoin. I'm not making US dollars. And I do that because I want to accumulate more Bitcoin as I'm trading so that when Bitcoin does get to $1 million or $5 million in the future, I just want to have more of it during that time. And one more point to that is some people are like, well, what is the point of accumulating more Bitcoin? I mean, what if I want to buy a boat or I want to buy a house or take a trip around the world? How am I going to get the money out? People keep thinking in terms of money. And this is what I really want people to start switching their perspective on, is because money is what we've been, brought up from the time we were born to think is the important part here. But money, if you think about this, US dollar bills sitting in your bank account lose purchasing power at a rate of 8 to
That's so true.
10% per year. Every year you have cash sitting there, it goes down in value, down in purchasing power, because they keep printing more of it, and with inflation, right? And so if I trade and I make $1,000 worth of Bitcoin on that trade, why should I convert that back to US dollars, which is a depreciating asset, when I could leave it in Bitcoin, which is an appreciating asset at a rate of about 80 to 100% per year? So I leave it in the asset that's going up in value. And so at the end of a year, 2 years, 5 years, I'm going to have a lot more Bitcoin, which is now worth a lot more as the value of the dollar goes down over time. Now, we still need money. How are we going to buy things? Well, if you have another job or business that can afford to pay your bills while you're doing this, you can get very rich. You can get very wealthy with increasing your assets, your crypto, your Bitcoin, your XRPs, the important ones. And then when you need money, instead of selling that Bitcoin and realizing a capital gains tax of maybe up to 40%, you could simply borrow against it, just like your real estate. You can borrow up to 40, 50% against your Bitcoin, which is a non-taxable event because you don't pay taxes on loan proceeds. But also keep in mind, you still get to keep the Bitcoin. They're just holding as collateral against the loan they gave you. And if your crypto is still going up at a rate of 80% per year, you can pay back the loan with the increased value of the asset being held as collateral. Just like real estate, if you have a 10-unit apartment building you bought for $1
And you're
million.
paying yourself back, right? Because you're taking that loan against your Bitcoin and you're paying yourself back. The interest goes back to you too. So that way that's increasing as well. And then that you're not paying any interest on that. But that triggers another question right here, right? So let's say if you're saying the Bitcoin, you're making money both ways, whether it goes up and down in any volatile market, you're making money. So how do you handle the taxes? Because there's a tax event, right? Because you're making money, even though you're making money in the digital currency. Would you report that into your taxes, or how would you handle that? Tell us that.
Yeah, so great question. So there's a couple ways to do that. First of all, you can just, if you're day trading the stock market, for instance, every profitable trade is a taxable event. If you're trading crypto on a crypto margin, you really don't, from what I understand, and I'm not an accountant or CPA, but we have several of them in our group, and it's not taxable until you sell the crypto. If you sell it at a profit, so if you just buy a Bitcoin in Coinbase and you just let it sit there until it goes up to $1 million in value, that's you don't have to pay tax on that until you sell that Bitcoin. You sell it for $1 million, you might have to pay a 40% capital gains tax on that when you convert that back to cash or profit. Until then, it's called unrealized gains, and you don't have to pay taxes on unrealized gains. So now, how do you get around that? Well, you buy $100,000 Bitcoin, it goes up to $1 million, and instead of selling it, you borrow, let's say you borrow $400,000 against your Bitcoin. The Bitcoin stays there in Bitcoin. The loan is tax-free because it's a loan and you don't pay taxes on loan proceeds. You can use that for whatever you want. You can fund your lifestyle with it. You can buy a new house. You can spend it. You can buy more crypto with it. But the Bitcoin that's being held as collateral, you still own. It still sits there, and it still goes up in value over time. So you're not killing the goose that's laying the golden egg by selling it. That's the problem what most people have. Same with real estate. If you're a real estate investor, you know that if you just flip houses, that's a transactional event. It's a way to make money for sure, but you're also having a tax consequence. You're taking profit every time, and you have no asset left. You have to keep doing it over and over again to make money. Whereas if you just buy the apartment building and you hold it forever, and you let the tenants pay down the debt on it, and you create equity by increasing the value and increasing the rents year over year, now you can refinance it, pull all that equity out tax-free, live off that, do whatever you want with it, and let the tenants continue to pay that new loan off. And then 10 years from now, you do it over and over again. That's how the rich keep getting richer and richer and paying less and less taxes. You can do that with crypto now as well. In fact,
so basically, so you are just accumulating everything there, not paying any taxes. So there's no tax event, basically, right?
there is a way.
You're not cashing it out by the year end, saying that, oh, I had this much profit, because you can't even say it's a long-term profit or a short-term profit or anything like that, because you're kind of getting away for whole that scenario, because you are taking a debt against it or just loaning the money back to you, and you're paying yourself back because you have that collateral, right? So
correct. There might be some.
Okay.
Yeah, there might be a tax expert out there that might disagree with me on this. Definitely consult with tax accountants and CPAs. But here's what I found out. Most accountants and CPAs don't understand crypto themselves, and they're not even 100% sure about how it all works. But one thing is for sure is that if you don't sell it, it's non-taxable event if you don't sell it. So how do you get money out of it? You borrow against it. That's a non-taxable event. Now, you're kicking the can down the road maybe if you eventually sell it one day, but why would you? It's just like if you owned a city block of Manhattan, or you inherited that 20 years ago or 100 years ago from your great grandfather, you're just collecting rent for the rest of your life until you have cash flow coming in. And there's no reason to sell that ever, because that just continues to pay you year in, year out. You can do that with crypto as well. As the value of crypto goes up over time, you could either borrow more. Like, when do you pay that loan back? Some people might say you don't have to. You just borrow more. And that's what they do with real estate as well. You just refinance it, pull more money out, use that money to invest in other things like real estate. If you ever do want to sell it, hopefully by then you've already sold your crypto to a trust or some type of entity where you are now a custodian of that. And you could actually do that, I believe, and you can convert it to the price that you paid for it, not the current value of it.
That's a really, really good wealth building strategy, and perfect conversation for our show. But I think I have a lot more questions and we're out of time. We are way over time. So I'm going to have you back. So maybe we're going to do one masterclass with you on crypto trading, basically. So I know you have a mastermind. So can you take like literally 30 seconds and tell us a little bit about your mastermind before we move on to a rapid fire?
Oh, yeah, sure. Yeah, well, we do, about 5 years ago, we created the Crypto Renegades Mastermind because there's so many people in the Facebook group asking us for help. So we decided to create a coaching and mentoring program, which has now evolved to over 2,000 members. And collectively, we do over $200 million a month in trading volume with our group on the platform that we trade with. And so what we do is we teach people not only the basics, how to set up your account, how to enter positions, how to get in and get out of the market, but to intermediate to advanced scalping and long-term swing trades. Basically, the whole goal is to get you to the point where you can not only replace your income, but create true wealth by trading crypto. And then not only that, but we teach what to do with the money once you have it by diversifying in other asset classes, and also how to get out of bull and bear market cycles near the top so that you can move your crypto from, let's say, Bitcoin into the altcoins that usually have a new bull market after the Bitcoin market. So timing the tops and the bottoms of the markets is very difficult to do, but we can pretty much get an idea of when the tops are in and when the bottoms are in. And so that you can take advantage of the next bull and bear market cycles as they come. So we have about, we go live 3 days a week, Monday, Wednesday, and Friday. I'm trading live for 2 hours each session in the group. We have a Discord group, 24/7 chat. All of our live training calls are live streamed into our private membership area so that if you ever miss one of them, you can go watch the replay. And so it's probably 12 or 15 hours a week total of live trading between myself and my partners. And we have some master traders in there who we've taught, and they've become consistently profitable. And they have their own time slots where they teach their strategies. So it's a great way. By the way, at a fraction of the cost, I spent about $30,000 at OTA to learn how to trade the stock market. And so we do this at a fraction of that cost of what it would normally cost for you to get institutional grade coaching.
Thank you so much. So this brings us to a rapid fire round, and I'm going to ask you 5 questions. Try to answer it only in one word and one sentence. Whatever comes to your mind first, okay? The first question is, in your experience, what is real wealth built through?
Real wealth is built through, first of all, having a formula and a strategy. You need to know what to do and then sticking to it. A lot of people see success very quickly and they get complacent or they give up too quickly before true momentum kicks in. They might have a result, kind of like losing weight. You might diet for a couple of days and see that you lost a couple of pounds, and then you get complacent or you go back to eating pizza and you don't stay on the diet. And you know that if you just stuck to it, you would gradually get to your goal, right? So I think that people who have the discipline to just follow through and do the thing that needs to be done day by day until that hockey stick happens, because this is what happens trading. You definitely have that happen, but it does take some people a month, some people 6 months.
That's true. So discipline is the answer. We're going to take it. So what is the biggest mistake new crypto traders make? One word or one sentence only, please.
Oh, it's hard for me to say one word. I'm a talker. But the biggest mistake is, first of all, not believing in themselves, not thinking they can do this. And once they actually start doing it, a lot of times they get lucky. They have a big win very quickly, and then they think this is easy, and then they go and bet the farm. You need to stick to the proper risk management every day. As boring as it may seem, making consistent money is much better than having big gains and losses.
What habit made the biggest difference in your financial journey?
Actually, separate from making money, becoming physically in shape made the biggest difference. Becoming healthy. I used to just work all the time and didn't eat properly and didn't exercise properly. Once I started incorporating that into my daily routine, my focus, my clarity, everything got better. I started to make more money. I felt more confident in myself. I felt better about myself. And, I'm on camera a lot. I'm training a lot and teaching a lot. And the better you feel about yourself, the more confident you feel about making money. For some reason, it's kind of, they go hand in hand.
So I think, I'm not sure if I asked this question before. Why do most people lose money in crypto?
It's very counterintuitive. You have to think contrarian. So most people lose money in crypto because they don't buy until there's a feverish pitch to buy, when the market's at its peak and everybody's talking about, oh my God, Bitcoin just hit 150,000, let's get in. And that's when you get out. People get in at the wrong times and they get out at the wrong times.
That's the right answer. Yeah. It always happens with everybody. So last question, what legacy do you want to leave through your work?
Well, my first goal might sound a little selfish. And I learned this from, I think it was Dr. Wallace Wattles. And he says that your first priority should be to get rich, because you cannot help anybody if you cannot help yourself. So I always tell people that they should focus on their wealth creation, on their businesses, and make money. Because if your goal is to help other people, which is my goal, my legacy is to have helped a lot of people. I want to help 1,000 people become millionaires. We've had many in our group so far, and I'm working on that. But really, it might sound, oh, it's just about money. No, it's about what you can do with the money. If you can take care of yourself and you can take care of your family and friends, then you can do a lot more. So help yourself first. And I think the rest will fall into place.
That's true. Have your glass full, then you can pour out. I love that. So,
That's
Niko,
right.
This has been incredibly powerful conversation. That's what I have to say. I know we are short on time because I have another recording in 1 more minute, but I love your story. I love the journey that you went through, and you have a lot to share. I would love to have you back, and I think let's continue this conversation. But for now, can you share with us, how can people reach out to you?
Yes, absolutely. And I would love to come back and share some more, maybe even share my screen and show people. But you can reach me. I am all over social media. It's my name, Niko Mercuris. Perhaps you'll get a link under the video or shared. But if you reach out to me on Instagram or Facebook, preferably Instagram, because if you send me a message on Instagram or comment on any of my videos and just tell me where you heard, tell me you heard me on this podcast, and I will send you a link to a free, basically it was a $1,000 5-day boot camp that I did, a workshop that we recorded. And I will send you a link to that unlock. So you'll get that training for free if you just send me a link to letting me know where you heard. I'll also give you a link to my next upcoming live webinar, which is kind of like a workshop as well, where I will share my screen. I will trade live. I will make hundreds, maybe even thousands right in front of your eyes and show you that you can do this.
Perfect. Thank you so much for doing that. And by the way, just plug in our podcast name, The Wealth Vibe Show, or just put my name there and you will get that discount, whatever Niko's offering. And once again, Niko, thank you so much for sharing your wisdom with us. And to our listeners, remember, wealth is not just about what you build. It's about how you think, how you protect it, and how you are aligned with it. And, that's how I think that's where the opportunity meets you, when you have that open mindset. So stay inspired, stay intentional, and keep building your wealth vibe. Thank you, Niko. I'll see you next time.
Thank you, Inge. Appreciate you.
Thanks for tuning in to the Wealth Vibe Show. If you enjoyed the episode, be sure to subscribe and leave us a 5-star review. And don't forget your free gift. Download the Busy Professional's Guide to Real Estate Investing at loombainvest.com. See you next time with another amazing guest and another powerful conversation.